There's a couple of things that you can't control, which will impact you hugely, which will be, one is obviously spot price for gold. What's it actually doing in the marketplace? And the second thing being, you're a bulk low grade operator here. I think your grades with some of these acquisitions are up, higher than we were talking about 0.3 when we talked last. Obviously, those gone up a bit, so it gives you a bit more room to make a bit more money. But those two components, you've got to closely, well, I suppose with the price of gold, you can only understand it and have a view on the future. I mean, do you have a view on how long this price is going to sustain for? Let's start with that one.
Yeah, I mean, I guess part of our theory and thesis here is and I know Ross uses it in baseball analogy, but in the fourth of 9 innings here, still in the first part of this cycle turn, gold has had a decent run. I would say it's probably run a little faster than I expected at this stage. And we're kind of preparing the business to see through the cycles. We don't believe it's one way and it only goes up, but we think we're in the early stages of the turn here. There's still 17 trillion of negative yielding debt out there. Stock markets are still doing well generally. Global growth is slowing a bit. It's lining up fairly nicely for things like gold and other commodities generally. And I think our business is going to have the leverage and the ability to, take advantage of that higher gold price, but it doesn't need it. So we'll manage the costs, particularly at the moment. You're not seeing a lot of inflation coming through, in terms of inputs for our business at the moment. So it's been a fairly nice, steady environment in that front.
What do you mean you don't need it? I mean, everyone wants to make as much money as they can, don't they? So when you say you don't need it,
I guess when you've seen what's happened in the past in a few of the cycles, if gold runs up quickly, you tend to see everyone kind of saying, I remember when I was working in Africa, everyone's making super profits, which may or may not be the case. Governments tend to want a bigger piece of the pie. Employees obviously want more of it. Communities do, and the problem is that they don't recognize that quite often that means the oil price is going up, your input costs are going up, your labor costs are going up. So margins tend to expand and contract as the gold price moves up, and they do widen when the gold price goes up, but it's not just a linear sort of relationship where if the gold price goes up, your costs stay flat forever. Quite often they move somewhat in tandem, although I agree that your margins can widen as the gold price goes up. So a steady increase that's slowly happening or managed rather than some spike because of some event or incident is much better for the industry.
Okay, so Christian, let's talk about the converse there. Let's talk about something the bit which you can control to a large degree, which is the cost here. So you've got this kind of low grade ore, but it's it's quite similar across all of your projects. That's the style of ore that you're going to be mining. So how do you keep that under control? Because if I look in your presentation, you don't talk about ASIC at all, and I wondered why.
Yeah, I think part of the hesitancy at the moment is we'd like to close the merger, which the Mexican antitrust we expect, late this month, maybe even third week. And then we can actually put out combined guidance. We want to be cautious here. I mean, theoretically, we shouldn't be putting out some kind of combined guidance until we've got a closed deal. But I think people can see from our prior year's production and cost and how both sets of assets have performed. They get a good idea, and you can see our rough production levels at the mine sites. You can see our all-in sustaining costs at the mine sites. And analysts do a good job of covering us. I think we've got 6 or 8 in total, and I think 6 in common between the two. So as soon as we close, we can then put out something fairly quickly thereafter that's on a combined basis and allows the combined board and management to get behind it. But it's just a few days too early right now to put that out.
Okay, fair enough. Now, I used a phrase earlier which was buying success. Okay, you're buying ounces. Okay, you're building this into a large producer. And I guess what people are going to be very keen to understand is, are you going to be doing this profitably, or is it just a case of producing enough, dollars to be, interesting? It's a large machine that you are constructing here. You've got, similar ore bodies, similar processes, and as you say, you're very, very good at it. But if it's low margin, then is that sort of interesting to retail, family office, high net worth? Are you missing the fundamentals of business here, or are you just in the business of building scale. Because again, if I look back through history, you've got companies that built themselves up into such a size, they kind of feel they're too big to fail, but they do.
Yeah, no, it's a very fair question and comment. For us, we set a target of roughly 1 million ounces. Leagold wasn't quite as specific about it, but I would say had the similar goals of building a business in the Americas that's diversified, scalable, investable. And I would say this transaction is the first catalyst in getting there. And what it brings us is some scale, but the goal really over time is to create a company that eventually I would suspect will sell or divest a couple of smaller assets, will add a longer life or new asset that continues to improve the quality of the assets in the portfolio. And in the long term, and I'm going to say 2 to 4 years here, we want to be paying dividends. I mean, our largest shareholder wants dividends. Ross would like dividends like he's getting paid at Pan Am Silver, and so will a lot of the larger institutions. But we're still a growth company at this stage. We still believe that we can continue to extract some value, create some value through sort of enhancing the portfolio. And so we'll continue to do that. And I think a lot of companies have gotten caught in a trap of being either single asset or smaller, which there can be an exciting story in that asset, and you see some huge success stories in exploration plays, but they're far and few between at the end of the day, where this will be a very liquid investable company for the long term and through cycles. Mm-hmm. And we're not exposed to one single jurisdiction or asset that will cause us challenges if there is an issue. We can weather the storm in a sense. And the other piece of it that I think is really important here is the fact that insiders will own 11% of this, which is a very significant amount for a company of this size. I think our next closest peer is 1.7% in that sort of mid cap or larger cap space. So it'll have also an owner focus from the management team and the board as well.